Chapter 1 Financial Statements. An overview content adapted from Fraser and Ormiston, 2023. Understanding Financial Statements, 12th edition. Pearson Education. The Map or the Maze. Welcome back to Mastering MHA. Today, we are diving into Chapter 1 of Understanding Financial Statements, and it's all about one big question. Are financial statements a map that helps you find your way, or a maze that leaves you confused? Think of it like this: when used correctly, financial statements guide investors, managers, and even job seekers toward smart decisions. But when misunderstood, they can hide red flags behind technical jargon and accounting tricks. Our mission in this video is to turn that maze into a map. Versus maze. A map gives clarity. It shows where a company stands and where it's heading. A maze throws in complexity, layers of numbers, evolving rules, and management discretion that can distort the picture. We'll learn how to cut through that confusion and focus on what truly matters for sound business judgment. Why understanding financial statements matters. Modern business is unpredictable: pandemics, inflation, crypto, global supply chains, you name it. Add in corporate disasters like Enron, WorldCom, and Lehman Brothers, and you see why understanding financial data is non-negotiable. Lehman Brothers looked profitable right before collapsing in 2008. Its income statement showed billions in earnings, but the cash flow statement told another story: massive negative cash from operations. That's the difference between paper profits and real money. So lesson 1, follow the cash. What you'll learn in this chapter. By the end of this session, you'll be able to explain how financial statements support smart decision making. Recognize who sets the accounting rules. Identify the key components of a company's Form 10-K. Understand the challenges that make accounting both art and science. And evaluate the quality of financial reporting, not just the numbers. How financial statements help decisions. Financial statements tell the story of a company's financial health. They answer questions like: is this a good investment? How risky is it? Can it repay its loans? Is it a stable place to work or lend to? In short, they turn business uncertainty into measurable insight. Who writes the rules? Every map needs rules for consistency, and that's where GAAP, or Generally Accepted Accounting Principles, comes in. Two big players shape these rules in the United States: the Securities and Exchange Commission, SEC, a government regulator; the Financial Accounting Standards Board, FASB, a private sector rulemaker. Since 2009, FASB's accounting standards codification has served as the single official source of US GAAP, constantly updated through Accounting Standards Updates, or ASUs. Accounting goes global. Business doesn't stop at borders. That's why the International Accounting Standards Board, IASB, created International Financial Reporting Standards, or IFRS. The goal? To make financial reports comparable across countries, while the US still uses GAAP. Global convergence efforts like the 2002 Norwalk Agreement have brought GAAP and IFRS closer together. So if you plan to work in international business or healthcare management, these differences matter. Inside the Form 10-K, publicly traded companies must file an annual Form 10-K with the SEC. It's a treasure map of information detailing everything from business risks and executive compensation to audited financial statements. The 10-K is standardized, transparent, and publicly available on the SEC's EDGAR website. It's the most reliable way to see what's really happening behind a company's PR headlines. The 4 core financial statements. Every 10-K includes 4 key reports. First, the balance sheet showing assets, liabilities, and equity at a moment in time. Second, the income statement showing how much was earned or lost over a period. Third, the statement of stockholders' equity, tracking changes in ownership value. And fourth, the statement of cash flows, which shows where the cash actually came from and where it went. Together, they form the backbone of financial reporting. The notes and the auditor's report. Right after the statements come the notes explaining accounting policies, debt details, tax information, and segment breakdowns. These notes are gold for analysts. They reveal the why behind the numbers. Then comes the auditor's report. Independent auditors check whether the financial statements present the company fairly under GAAP. Under the Sarbanes-Oxley Act of 2002, management must also certify the accuracy of statements and internal controls. The auditor then issues one of four opinions: unqualified, qualified, adverse, or disclaimer. A clean, unqualified opinion means the books look solid. Management discussion and analysis, MD&A. Beyond numbers, the section tells the story behind the performance, what drove results, where the company gets its cash, and what's changing in the business environment. The SEC updated its rules in 2020 to make this section more useful, requiring explanations of critical accounting estimates and trends. Still remember, MD&A shows management's perspective, so always read it with both curiosity and caution. Sarbanes-Oxley and financial reforms. Corporate scandals in the early 2000s shook public trust, leading to the Sarbanes-Oxley Act, or SOX. SOX created the Public Company Accounting Oversight Board, strengthened auditor independence, and required CEOs and CFOs to personally certify their reports. This law changed accounting forever. It made transparency and accountability a legal duty, not just a moral one. Proxy statements and PR fluff. Along with the 10K, companies issue a proxy statement before shareholder votes. It lists directors, executive pay, and audit fees. But beware of PR fluff. Those glossy reports and upbeat letters to shareholders can paint a picture that's far rosier than reality. Lehman Brothers' 2007 letter bragged about record profits and liquidity management just months before its collapse. Always check the facts before buying the story. What's missing from financial statements? Some of the most important information isn't on the page: employee morale, company reputation, leadership stability, or ethical culture. These intangibles affect long-term success, but can't be measured easily. Even within the statements, crucial details like debt maturity schedules or segment data may be buried deep in the notes. Good analysts learn to connect both the measurable and the invisible factors. Accounting principles and assumptions. Behind every number are core principles. Materiality. Information must be significant enough to matter. Comparability and consistency. Use similar methods to track trends. Going concern. Assume the business will continue operating. Monetary unit. Report using the country's currency. These principles keep financial reporting reliable, comparable, and understandable. Accrual versus cash basis. Here's where things get practical. Under the accrual basis, revenue is recorded when earned, even if no cash changes hands. Expenses are matched to the same period. Under the cash basis, transactions are recognized only when cash moves. The accrual method gives a truer picture of profitability, while the cash method shows liquidity. Most analysts and this textbook rely on accrual basis data to evaluate performance, the quality of financial reporting. Even with GAAP, management discretion plays a huge role. Choosing between inventory methods, adjusting expense timing, or cutting R&D budgets can all affect reported earnings. High-quality reporting stays conservative and transparent. No earnings games, no hidden surprises. Poor quality reporting, on the other hand, can mislead investors and destroy trust, from maze to map. By now, you can see that financial statements are powerful tools, but only if you know how to read them. They can feel like a maze of numbers, rules, and footnotes, but once you learn to navigate them, they become a map to insight, strategy, and success. In the next chapter, we'll unpack the balance sheet and learn how to interpret a company's financial position with confidence. Closing and credit. Thanks for watching this episode of Mastering MHA MBA. If you found this helpful, hit like and subscribe so you don't miss chapter 2. And remember, content adapted from Fraser and Ormiston 2023, Understanding Financial Statements, 12th edition, Pearson Education.